We're doing it live, baby. We are doing it live. Good morning, my fellow simpletons and degenerates. It is I, once again, the Savage of Wall Street. It's going live because we see some breaking news and we had to come in and just laugh at the shenanigans and the clown show that continues, this time with GME. You gotta just join in the tomfoolery sometimes, my friends. You gotta join in the circus and the carnival, and you gotta just sway with the music and know that this is not personal. It is not. It's just about money. Those who have it, those who want a lot more, and those of us who want our piece of the pie. And we're not trying to get $1 billion. We're just trying to get a good nice million, so that we can live comfortably, right? And make our lives a little easier. Welcome. I am the Savage of Wall Street, once again going live on this Sunday, September 28th. And hey, wherever you are in the world, thank you for watching Savage Wall Street. Let's do this. Another analyst bites the dust, my friends. Another analyst bites the dust. Wedbush analyst Alicia Reese has ceased covering GME as of September 28th, 2025, due to a relocation of analyst resources, aka she's done. She knows that she gave us a $13 price target. There's absolutely no way that this stock is worth $13. So since her ass is on the line, she decided to just take a slow Homer Simpson step back and stop covering GME. Because, obviously they have to allocate resources elsewhere, whatever that means. The decision leaves GameStop without a traditional Wall Street rating. Surprise, surprise. Right. A week before these warrants have to start getting accounted for, right? As Reese was reportedly the last sell-side analyst to provide one. Isn't that something? The key details on the end of Wedbush's coverage is the analyst. Obviously, the final Wedbush analyst to cover GameStop was Alicia Reese, who inherited the coverage from Michael Proctor, another clown. Final rating: before ending the coverage, Reese has maintained an underperformed rating on the stock with a price target of $13.50. Surprise, surprise, we're pretty much twice that right now. And it seems like we're just not going anywhere near 13 for the time being. However, she's giving Palantir a $190 price target or some shit like that, which is insane because that would give us a 700 forward PE ratio, right? Price over earnings, which is insane. Absolutely insane. Anyways, that's what we have. Rationale is the official reason provided was a relocation of resources because Wall Street doesn't have enough money, right? However, reports have noted that GameStop has become difficult to analyze using traditional financial metrics, which is a key factor behind Wall Street's withdrawal. The stock's price is often driven by retail investor sentiment rather than just fundamentals, of course. Fundamentals are bad when retail says, hey, the fundamentals seem to be pretty accurate here. And fundamentals are good when Wall Street says, hey, this shit is trading at 1,500 times forward PE fucking ratio. Put your money in here. There's no shenanigans at play. So, company license, GameStop's management has also contributed to the difficulty of analyst coverage by shunning investor interaction. The company has not held a conference call with its earnings report since March 2023. Why? Because how are you going to tell people, right? Hey, look, we have $10 billion in the bank. We got no debt. And Wall Street wants to ask all these dumbass questions that have absolutely no pertinence to what the key factor is, which is they are sitting on $10 billion pretty much, right? The next quarterly earnings is in December 9th. So I guess they're giving us a 15-cent per share um, number, right? That's kind of where your expectations are. The earnings per share is like 15 cents. I am telling you it's going to be closer to 25. And GME is probably going to go closer to $35 a share. That's just my own personal opinion. You don't have to take it to the bank, obviously. My own personal opinion. Um, Long-standing bearishness basically says that Proctor, a prominent analyst, who is the analyst that was covering from Wedbush the stock before this clown just left, um, covered GameStop for years and was a vocal critic of the meme stock phenomenon, arguing that the stock was being propped up by retail investors rather than fundamentals. Because yeah, of course, right? We like the stock. We don't believe it should be where it is, especially if you're sitting in $10 billion of cash. There's companies that are bleeding money right now. Okay? Companies are bleeding money, making no cash. They're making absolutely no cash flow. And yet, these clowns on Wall Street want to say that this stock is worth $50, $60, which makes absolutely no sense. Previous analyst coverage says before Reese, Proctor handled the coverage and re-expressed strong criticism or skepticism about GameStop strategic direction. I would say you're a dumbass. Wait till the NFTs and cryptocurrency kick in. All right. The non-fungible tokens are there for a reason. They cannot be fucking fudged. Do you understand? You can't just generate dumb shit. What there is what there is, right? Kind of like blockchain. Okay, it's a fucking book where everybody writes their name and then everybody else says, oh, look, this page number 3 has so and so's name on it. And everybody else says, yeah, you're right. Everybody agrees that page number 3 has so and so's name on it. Nobody can come in like some fucking analyst or some dumbass CEO and say, well, actually, I disagree. And everybody will be like, okay, we take your word for it because you're a CEO. No, that's not how it works. And wait until Bitcoin hits $150,000 a share. It will, and it will. Okay. We're talking about, GameStop then holding over $1 billion in crypto assets. Anyways, it's just I'm getting ahead of myself, but I love the fact that this clown stopped coverage of GME, and she's being shown the door because she's in fact a clown, and I have nothing but bullishness towards GME and what the future holds. You guys know I like writing my covered calls when it comes to my assets, but GME is the one stock that I'm not writing covered calls on because I am just that bullish on it. I do have a belief that we're going to $35 a share based on all the fundamentals. I do believe that the earnings per share are going to be close to 25 cents in December, as opposed to the 15 cents that everyone else in Wall Street saying they expect. I think that these digital assets are going to begin to show that they are in fact profitable. The brick and mortar stores we're deviating a lot more from, right? So they're taking the digital assets into are beginning to be more important. They're seeing kind of what the future is. Old heads like me, the 40-year-olds, the 30, 40, 45, 50-year-olds, we're in the downhill, man. You have purchasing power. Yes, we do. But it's all about captivating the new age, right? It's all about captivating generation alpha right now, right? Generation millennials, right? The millennials are now on the rise, right? Generation alpha is on its way up. And then we're going to have generation beta, right? Or Charlie or Delta, whatever they want to call it, right? So it's about getting into the next generation and letting them know, GME is in fact a good company. Look, this is where video games are going. This is where power packs are going. This is where the opportunity is. Cryptocurrency this is where we're going, and GME holds it. the next investors are coming up, the next generation of investors. We have to show them that GME in fact is a good bet on the long-term hold of a company. Anyways, I don't mean to get ahead of myself. I just started rambling, guys. I'm sorry. Let's see who we got in the house. Cannon Fodder's in the house saying hello, money makers. In fact, we are making money, my friend. How are you, Cannon Fodder? Win Commander saying, seriously, I had like 3 hours of sleep last. Hey, Tolan, I'm sorry, bro. You know what, man? I second that. My daughter had a sleepover this weekend and yesterday, and they were up. Jesus Christ, these 10, 11-year olds, man. I caught them. I heard noises downstairs, so like I go up and I'm down there kind of like trying to figure out what's going on, and I see my daughter and her friends out there like laughing, and then they all once they heard me coming down the stairs, they all faked like they were asleep, man. They all just did one of these. And I said, no, you guys are not going to pull that one on me. It is 2:30 in the morning. You guys got to get up and you guys got to, dude, we knew that we were going to spend the night. So I got these giant marshmallows shaped like hearts and stuff. And guess what they were eating at night? They were eating power drinks because they needed energy at 2:30 in the morning. They needed power drinks and they needed those giant marshmallows. So that's what we're dealing with here, my friend. And anyway, so I couldn't go to sleep because once that kicks in, like that I gotta kind of get on my P's and Q's and figure out what's going on downstairs. Like that kicked in the adrenaline rush, and I couldn't go to sleep till like 5 in the morning, 5:30. So I feel you, bro. And then they woke me up extremely early because obviously it's 11-year-olds, 10-year-olds, they won't sleep past 8:30 a.m. no matter what. So I'm with you, Cole Tovin. Hector's in the house saying good afternoon. Jude K is in the house saying good afternoon. Charlie C is in the house. Mark C, howdy everyone, waiting for your words of wisdom. Joey V saying he is on. Happy Sunday, Savage and fellow option money makers. Happy Sunday, Joey V. Wet Bush is the most reliable analyst firm out there. It is not. It is really not. So I hope you guys are having a great weekend. I hope you guys made money last week. And, I had to just come quickly on because I did read that. And I just wanted to, obviously go live and let you guys know that if you are holding GME, this is in fact good news because it's another break being taken off, right? These people don't want to put their name out there, man. These people don't want to put their name next to a stock that's about to rip to $35-40 dollars a share, and that's pretty much what is happening right now. I'm here for it. I'm sure you guys are here for it. And same thing that's happening with Open Door, right? All these analysts were basically saying Open Door was on his last days. There was going to be some type of a reverse stock split, right? And they were talking about a 10-to-1 reverse stock split and such. And then Open Door did what Open Door did, and now it's pretty much all the numbers are telling you it's at a buy point, right? So I'm not giving you financial advice. Anyone out there, if this is your first time watching, do know that I like to go into any position, and that's exactly what I preach. Is if you're going to go into any position when it comes to investing, you want to go into a stock that has been undervalued, and it's taken a hit of like 5, 10, 15%, and then going through cash secure puts, one strike below where it is at that point after being hit 15%. So just so you know, that's the way that I like to go into my stocks, and that's what I preach. And a lot of the people that are watching me, in fact, do the same thing. They acquire their stocks in that way, so they get paid to buy the stock that they want at a discount. So if there is any weakness or further weakness in the market or that stock, They do end up getting it, right? But it is a discount. Everybody knows that you buy on red days and you sell on green days. But what better, or isn't it better, than to buy on a red day, or say you're going to buy on a red day at even more of a deep discount, and then you do get the stock? That is even juicier to me. I get paid to buy a stock that I want at a discount. There's nothing wrong with that. Okay. Worst case scenario, I get the stock. In reality, what I'm trying to do is I'm trying to get that premium, and then the stock is going to recover, right? And so that cash secure put in fact dies, out of the money, and I get my collateral back. Collateral being the money that I spend for that cash secure put, which it could be $10, $11, $12 times 100, because that's how cash secure puts work and cover calls. And when I do get put them shares, I wait for a day in which the stock recovers 5, 10, 15%, 20%, and I sell a covered call above the strike zone, or the strike zone above where it's at, 1 or 2 strikes. And then I bring in premium that way, especially when I go 1 or 2 months out. So that's the gist of it. And so, my friends, very happy to read these news. Very happy to see that you guys are tuning in, and wanted to share with you guys this index that I came across, and it is the Fear and Greed Index. Okay, this index basically shows you that people, are either extremely greedy at this point based on the market's performance, or in extreme fear. We were at kind of, at 65 to 70 a couple of weeks ago, a week ago actually, and so we were at greed, right? The market, the fear index was showing us that people were in fact a bit greedy, not extremely greedy, but greedy nonetheless. We like when the stock market is greedy, because then we can sell our covered calls for a higher premium. That's what the fear index does. It basically gives you more volatility and higher premiums because of that volatility. I look for stocks that have been undervalued, so that I can, in fact, make more premium. The more premium, the more cash, the more likely I'm able to then make money with that stock. Obviously, you're going to look at a stock that has good fundamentals, very well ran, good CEO, good board, and one that you do not mind owning for a few years. I can't wait for that to be at extreme greed, because that is my cue to take a lot of money off the table. And I can't wait for it to go to extreme fear, because when everybody else is fearful, I am extremely greedy, and I go in and I start, I feel like a kid at a candy store, and that candy store has everything on discount. I just buy this and that, this and that, this and that, and I wait for the recovery, which it always happens. Let's see what we got here. We have Susan Shops is in the house. Susan, good evening, good afternoon, wherever you are. Welcome to the channel. Once again, it's Ryan saying it's not extremely greedy or fearful. It's average. So averages, right now, the average is at neutral, right? The neutrality of it is telling you fear and greed index is at neutral. Things are not necessarily crazy, but the VIX is the one that really that does most of that work. Going from greedy to neutral also has averages of those sellings are fearful, or those selling are fearful, and those who are bullish are buying. It's slowed average, which is a good. Yeah, well, I like extreme greed and extreme fear myself. I like it when it's at the high end of greed and at the high end of fear, because it just tells you what the overall market, right? Especially the retail market is where they're at. And when people are either extremely greedy, that's when I start kind of taking money off the table, because I know that the shoe's about to drop, and when they're extremely fearful is when you kind of go and buy stock at the cheapest, because everybody else is selling. Karen D is saying, hi, Savage and everyone. Karen D, how are you? I hope you're doing great. Um, so I wanted to touch base with you guys and let you guys know about uh, this one op-ed that I came across, and so it just goes to show you where things are at and just how lucky we are to do what we do, right? Um, and how I believe that if you were to come up with 250,000, you would be sitting in a mini gold mine or on a mini gold mine. Look at this. My in-laws who are 95 are leaving us 250K. What are the smart ways to invest in money? So this is from the Wall Street Journal. Plus, it's an op-ed, and so this is just one of those things where I love to talk about opportunities like such, because everyone else that is out there in the just in the regular world, right, would it comes up on like $100,000, 150, $250,000, $1 million, right? They're like they have no idea how to go about this, and then they're like the first reaction to would be to like put it in a bank, right? Because they don't know how to go about it, and then the bank will probably tell them, "Hey, put this in a CD," because obviously it's in their best interest, right? Or they would say, "Hey, you know what? We have um, a wealth management, section of the bank, and they return anywhere from 5 to 10% every year. You have $250,000. You're looking at a $25,000 return." And then people will be like, "Yeah, let's do that." Well, guess what? If we came up with $250,000, I would basically say, and this is why we were talking about doing cash secure puts, and that's how you acquire your stocks. If you came up on $250,000, what would you do? And that's kind of a question that I would raise to you guys. I'm curious to see what it is that you guys would do if you came up on $250,000. I know what I would do, and I think I've gone over this before, but I never really asked people, "Hey, if you came up with 250,000 bucks, and they told you, hey, tomorrow Monday, we're gonna get $250,000 into your account, what would you like to do with it?" I'm curious to see what you guys would do. Very, very curious to see, because I know what I would do, right? And I'm always telling you guys, "Oh, let's do an exercise. Let's do this, and that." But I'm curious to see what you guys would do. If you guys would humor me, right, and let me know so that I can see where your minds are at. Um, and so please, uh, feel free to tag away and comment, because I'm very curious to see this. So let's see here. Susan Shops is saying, "What is going to happen with GME this week? Does anyone think hedge funds are going to drop it to 2022, or is going to 30 and up?" Savage, I'm in Florida, where everyone else is from. All right. So, Susan, I think I was just talking about this at the beginning of the show, and you could watch it from the beginning if you want later on. Um, Give me a second, please, guys. Got a phone call. I got to take this phone call. Hello. Oh, good, good, good. Okay, great. Perfect. Hey, anytime. No problem. Okay, cuídense. Okay, bye. All right. Looks like overseas markets have not opened up yet. All right, here we have Jude K saying definitely more SoFi. So Jude K, well, I know, but okay, what would you do? Would you buy more SoFi at stock price, like where it's at right now, which would be um it's 27.93 at this point, or would you do something else? Like, what would you do? Would you go at buying at at where it's at? Would you buy calls? What would you do? I'm curious. I know you say more SoFi, but what about more SoFi? Right? Roaring Yiddy would say, "Shoot, YOLO." I don't think you YOLO. I think you're smarter than that. Um, I don't think you YOLO. But what stock, Roaring? So let me know. Roaring Yiddy, let me know. I need to know the stock. I need to know, premiums. I'm very curious to see, you know, price targets, all that stuff. It would just, I know what I would do, and I'll tell you guys. Susan saying Chicago here. Joey V saying Chicago here. Susan 250K split into 50K chunks. Right, cash can put on SoFi, RXRX, BBAI, Mara, and Open. Roaring Yuri saying I just joined. So all right, Roaring. So basically, I was just saying, because I'm reading this right here, that someone says my in-laws who are 95 are leaving us with 250K. What's the smart way to invest this money? And I'm saying that if they went to a bank, the bank would probably just tell them, hey, put it in our health fund. I'm sorry, not health fund, wealth fund. We have a wealth fund management uh, uh, part of the bank. And so, they will tell you what to do. Obviously, they take a cut, but they will bring you in 5 to 10% every year. On 250K, that's 25,000. But like, what would you do? So I think Joey V has a very good idea on how he will go about things, and I am more in tune with that type of that frame of thought. SoFi, RXRX, BBAI, Mara, and Open, 50K chunks on right, dude. That is along the line of what I would do. Absolutely. Joey saying, well, right weekly cash secure puts to get 1 or 2% weekly and compound it weekly. See, I would now do weekly. I would do monthlies, daring the market, but I would get bigger chunks, right? But I get it. I know why you're doing it, and I'm totally okay with that as well. Roaring Yuri saying, I mean, I'm still eyeing Open. The weekly charts look really good. Okay, so if you have 250K, right? You would basically go and buy Open Door, 250K worth of Open Door, or you do calls? Would you do cash secure puts? I'm very curious to see. Susan is saying Savage. Um, Early February, Uncle Bruce ranted about writing SoFi 2026 cash secure puts. The $25 we're paying 13. 501 had 250K and wrote 100 contracts. 135K in premiums came to me. In premiums, couldn't sleep that night, so I bought back the next day. You bought back the next day? Oh man, that money right now, that, yeah, why? You make so much money right now, Susan. Oh man, that was a good. I know, I wrote those same cash secure puts, man, and I bought back for like nothing. Karen D saying I would buy short-term treasury bills, cash, and 50K in cash secure puts, max 7 too. Karen D, okay, I get it. I respect that. Susan shops. I know, but the way I panicked, it wasn't worth the stress. Asset allocation is so important. I get it. I get it. I get it. This is why I'm more in tune of, like, what Joy V was saying. Like, you get 5 stocks that are stocks, growth stocks, and you would make. I mean, those are great returns. I would not use a 250K, but probably 50K cash secure puts plus maybe buy 25,000 and wait for a pump, then cover calls. Roaring is saying. Susan Shop saying also I am more bearish on this market without a government. I've read the year out leaps and been read for months. I get it. Did you write cash secure puts though, or did you write cover calls, Susan? I'm curious. Wing Commander saying first night away from home since my second kid arrived, flying out to a customer, getting drunk and watching Savage and Serenity. It's all good, brother. It is all good, man. Wherever you are, cheers. Have a nice glass and just relax, man. The stock market's going to open in another 12, 15 and a half hours, 16 and a half hours, something like the 15 and a half hours. So it's all good. We're waiting for open. So if I had $250,000, right, which I actually have, what I did is I did 2 cash secure puts on Tesla. They were like 190s. And I think the stock was like a 150 or 140 that time, and I did 125, so I did 130s, but I also did two 190s out to 2026 December. That day I brought in a ridiculous amount of premiums. I did Nvidia cash secure puts, um, and let me see what else. Bought SoFi. Um, I did. I want to say I think I did Google cash secure puts as well, and none of those I was I was put the shares on. I it was like I think it was like close to 200,000, and none of those ever came to fruition. The last two cash secure puts I bought back were a couple of weeks ago. They were Teslas. They were the 190s, which I think I got like $48 for or $58 for, something insane, right? And and I bought back for I think $10, 10 or 905 or 1005, something like that. So uh it was basically a cash grab. I really was expecting Tesla to stay within 200, 250 and come down, and then I was gonna roll up. But there's no way I'm gonna roll up my cash secure puts to 400. That's just it's too much capital to get locked in there for a couple of years. And again, I took that premium and I bought, I believe, Unity at like $15 or $16. I bought SoFi at 8 or 9 then, or 7. I bought I bought Roblox like at 35 or 40, and I sold covered calls on those. I bought Palantir. It was like I think it was like 15, $20 a share then. So, and I wrote cash secure puts on Palantir. I bought Rivian. So like I've been active, right? So but yeah, so I used that premium to pretty much grow my portfolio. And it's not it is a lot of money, but when you allocate it, kind of like in 10 assets, 5 to 10 assets, and you do cash secure puts, and you do 10, 15, or you do 19, $190 cash secure puts, two of them are $38,000, right? So like that number becomes very small really quickly. And then you see the premiums and you're like, you get like $75,000 in premiums, that's a lot of money. And then those $75,000 you can be a lot more aggressive with, because it's cash secure put money, and you combine that with the fact that you have that in an ETF which generates 5% every year, and it compounds, right? uh it's not terrible at all. And you can definitely get more than $25,000 a year, and you can outperform the market. And with $250,000 a year that you have to invest, or you came up with $250,000 basically, right? You can definitely, if even on a more conservative um, approach, you could easily make $50,000 a year with 250K, being extremely conservative. So I see people say that my in-laws are leaving me 250K. It's so much money. I don't know what is the smart way to invest. And I guess if you really were not trying to um, take control over it, and you were okay with someone else taking in a nice chunk of your earnings, and you could say, hey, here, I'm okay with $20,000, $25,000 a year. That's not terrible, but I just, you would be leaving so much money on the table. And I just think that if you were to like allocate it in different sections through cash secure puts, you could make a nice return on that. So Susan is saying, Savage, they were very in the money. SoFi was at $13, $15 going for cash grabs. It's fun until it's not. Yes, they were cash secure puts. Yeah, I figured. And so this is one of the things, Susan, that you have to you have to know what you hold, right? And I get it. It's nerve wracking, right? I mean, how do you think I felt having over 20,000 SoFi shares, and I'm averaged, at like eight something dollars, and the stock's at 6, 7, right? But like, I mean, it's just, Anthony Noto was buying millions of dollars of stock, right? So there's so many reasons on why CEOs, COOs, CFOs, and just insiders of a company, there's so many reasons why they sell, be it for tax purposes or to just, generate any type of cash flow, um, to just take profit. I mean, it's so many different reasons why, right? But there's only one reason why they buy, and that's because they have a very good understanding of how the company works, and they see it making more money. They see the stock being more valuable in the future. So that's kind of why I was just bullish, because everyone else was saying SoFi didn't belong there. What is SoFi? It's just you gotta get all your bearish um, positions, right? And they're gonna give you all these bullet points. But at the end of the day, you have to kind of know why you got into the investing of this company in the first place, right? And you have to do your due diligence and see what the growth is, and at what how rapidly it's growing, the company. And then just look at the financials, look at the quarterly earnings, and see that if a company is beating every single metric, it's just a matter of time. This is why Palantir went so crazy, because they were not expecting it to turn profitable so soon, and it did, and they went nuts. So look, Nvidia is not even trading at the same rate that Palantir is. Nvidia is trading at like 28x uh, times forward earnings. Like, it's the cheapest Mag 7. Like that, like I don't think Nvidia should be 170, but if it goes to 160, 155, I'm selling some 150 cash secure puts just because I want more Nvidia. I have Nvidia. I bought when it was 90. I bought when it was 100. I bought when it was 110. And so if the opportunity is there again, I'm going to buy more Nvidia. It's only trading at 28 times earnings. And of all the Mag 7s, it's the one that's trading at the lowest rate, right? So it just makes sense for me to go in and buy more, take a bigger position. You know, um, if Tesla got down to 200 a share, I would go and do the same thing with Tesla. Instead of doing 190 cash secure puts, this time I'll do 250s, right? 240s. I don't know. The stock will tell me what to do, right? I'm not trying to time the market. I mean, I do know, how to read a graph. I know what the Bollinger Bands mean. I know the moving averages, but like, nobody knows what the market's gonna do. And sometimes contagion will take a good company down. So like, just take what the market gives you, take what the stock gives you. It's a really red day, go through a cash secure put. Get paid to buy the stock. If it runs a lot and it's a company that you're owning, right? And the company went 10-15% on a day on the green, you're gonna sell some covered calls and bring in premium, making your life easier, right? But never sell covered calls if your average is below what the covered call is for. That's just silly. If anything, average down through cash secure puts, and then once you're average down, then go and sell covered calls, but always go at a higher price point than what your average is. That's the key. So Susan is saying I will do year-long leaps on SoFi again, especially if premiums are 10 to 12 for 1350 again. When the market crashes, and it will, those with cash and know how to write or buy leaps will win. Well, I mean, so you're trying to time the market. That's what you're doing, Susan. And I would say to you, even if let's say the market was to crash, right? I'll play with you there. You think SoFi is going to make less money? Do you think SoFi is going to make less money? Right? The interest rates are getting cut. If SoFi was making these returns when the interest rates were high, don't you think they're going to make more money when people take out more loans? I'm just putting that out there, and they're going to keep expanding because their rates are more attractive than traditional brick and mortar banks, because they're able to then pass on the savings to the consumer, to us, because they don't have to pay for insurance. They don't have to, first of all, they don't have to pay for rent, right? They don't have to pay for a building, where they have, 50 people working. All those fifty people have to get paid a wage. They have to get, insurance. You have to pay these people pay for these people insurance, right? It's 24 hours around the clock because you're going to have security. You're going to have to pay for cybersecurity. You're going to have to pay for custodials, right? And then sick leave. You have to pay for marketing, um, insurance on that building, all types of insurance and taxes and fees. I mean, SoFi doesn't have to pay that, right? And then you multiply that by, like, however many banks. Let's say Bank of America has a Bank of America. Let's say they have 2,000 branches or 2,500 branches worldwide, or nationwide. How much money you think they're leaving? When was the last time you went into a bank? You gotta ask yourself, when was the last time you went into a bank? And so I have to just say, if the economy took a downturn, I don't think that SoFi would make less money. I don't think it would take that big of a hit as you think it would. So I think $40 cash secure puts out to 2028, not a terrible deal. Especially if you could bring in close to $20 a share. You're essentially buying the stock for $20 in 2028. I don't think the stock is going to be at $20 a share in 2028. I don't think so at all. I think it'll be closer to $45, $50 a share. So those cash secure puts are going to die worthless, and you're going to keep all that premium. But that's just my 2 cents, right? Let's see what we got here. Susan saying, I believe market crashes. Okay. Joey V, people are have been calling on the market to crash for quite some time. Well, I don't think people are calling it to crash. It's just it's overvalued, right? And based on all these metrics that we've seen, and based on the unemployment rates, based on the number of people that are not being employed, right? Based on the number of people that have been unemployed for longer than 6 months, um, based on inflation, based on tariffs, based on overall spending that is down, based on the fact that companies are now buying themselves, right? They're not. So, like, you have Nvidia, make buying Google, or Amazon buying Nvidia, or Microsoft buying Nvidia, and it's fugazi, man. These guys are all CEOs that have talked amongst themselves and said, "Hey, there's not many people buying our stock anymore." So now they're buying each other's stocks, synthetically keeping it up. You think that's not what's happening here? I mean, once a company says, "Oh yeah, we're gonna buy by stock," that's my cue. That's my red flag going off. My antennas go ding, 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 ding. This shit used to be illegal in the 80s. Illegal to buy back your own stock because it showed you no growth. There's no growth. You're them saying, "Fuck it, we're gonna use our own bank to buy our stock where it's at so that we can synthetically keep it up." And then Ronald Reagan came along and fucking did away with that. But buying back stock, you don't have to believe me. You can fucking Google this shit, right? So when a company starts saying we're gonna buy back our stock, that's just me saying, it's telling me, oh shit, nobody's buying that stock. It's not worth what it is right now. So they're synthetically, like non-organically keeping it up. So then I start taking money off the table in different ways, and I start buying back, covered calls. If the market dips a lot, I start then, being a little more cautious on what stocks I buy and when, and so it's kind of my cue, right? So again, Um, we don't know what's going to happen, but nobody ever got hurt taking money off the table, ever. I'll tell you that right now. There's people that have always complained and said, shit, I should have sold that X amount. Damn it, I should have sold covered calls. Damn it. Like I laugh my ass off when like I see in different channels people saying on a day when the stock crashes 15% for whatever reasons, and they're like, I just sold covered calls to cover my ass. And it's just like, what? You sold on a red day? Like, that's fucking not what you're supposed to do. That's not how this is done. Like, you're supposed to sell covered calls on days the stock rips, right? So it's just like, it's laughable. But you guys don't do that because you guys know better. You guys know we sell covered calls on really green days and we sell cash secure puts on very red days. That's what we do. That's what we make money. Let's see. So yeah, no, like just based on what's going on, dude. Nobody knows what the stock market is gonna do, right, Joey? Nobody knows, but it's never a bad thing to take a profit, right? You sold 10 covered calls on SoFi, $35 strikes, expiring in January when the stock was like at $31, $30 and change. Beautiful. I was telling people, hey guys, just so you know, the stock's at $30. Close to $30. Don't be afraid to sell some covered calls out to January. Sell some 35s. Bring in $3 a share. The stock, $4 a share. Go out to January. Bring in some cash. Make it real. Worst case scenario, you're selling at 35, but you got $3 back, $4, but you're selling at 38, 30. And in that date, if the stock happens to be $35 an hour, $35 a share, you can roll to 40s in June or April. Bring in more premium. Kick the can down the road. It's just, selling cover calls on red days, it's crazy to me. Roaring is saying my issue is my account is so small I can't afford 100 shares. Cash secure puts for most stocks unless they are penny or mid cap. So I'm probably more risky than I would be if I had a big enough account. Roaring, giddy, it is all good. It is all good. Trust me. This is this is why I give such a vast array of different stocks, right? You see me, I have RXRX here. RXRX is 472 a share. You guys can do cash secure puts expire in January or December in the RXRX, and they'll bring you like $1 and change. That's not terrible. The stock's all-time low is 360 something, right? 370. So you're basically buying it at like that price point, like at an all-time low. And you're getting paid to buy the stock. Worst case scenario, right? I tell you guys about Rivian, which is $15. We obviously do GME. I tell you guys about Sentinel One, which is $18 a share. You know about TerraWolf because you put it on the map. I tell you guys, Open, when Open gets down to 8, 7 something, I sell do $6 cash secure puts, $7 cash secure puts out a month. Bring in $1.50, $2 a share. Not terrible. I tell you guys about Rocket RKT. I told you guys about let me see. I told you folks about Smart Rent. Smart Rent is like $1.60 a share, $1.50 a share. Quantum Psi, same thing, like a $1.50 a share. So like I try to be cognizant of the fact that not everybody has the same amount of capital to start with. I get it. This is exactly why I show a vast array of stocks where you guys can look at and see if it's something that it's worth getting into. So I get it, and it takes time, Roaring, which is I'm very excited for you because you're young, you're starting off at a right time. And in the next year or two, I honestly think you're gonna be making a lot of money. And don't be afraid to dump as much money as you can into the market whenever possible, obviously. Right? You have an extra $100, you have an extra $200, dump it in. I promise you, in the long run, it's going to, like, you sacrifice right now a couple of years of living very frugal, sacrifice 2, 3, 4 years of living very frugal. It'll turn into 20 years later on in life where you're gonna live like a fucking rich person. That's how it's gonna happen. But it takes time, right? So it is all good. You're going at your own pace. You're starting off young. We're here, man. We're here for the long run. Very excited to see how things turn out for you, Roaring. Um, Jude Casey, agreed, Joe. Uh, Roaring, you could have a diversified account with a very small, small portfolio. Again, if you had $1,000, $1,500, you could have 100 of Smart Rent, 100 QSI, 100 RXRX. There's some other ones there. 100 GFA. You could have 100. Let's see here. Nano Dimension. You could have 100 of NNDM. You know. Um, Allergen Therapeutics, ALLO. It's a 122 a share as well. So you could have a very diversified portfolio with $1,500. It's just you wouldn't be able to trade them as quickly. It is a little boring. Making a lot of money is boring. People that are like day traders are always saying how exciting it is, and they made $20,000, $15,000 today, $10,000, but they won't tell you when they fucking lost $20,000 in a day. In my channel, I tell you, guys, I just sold for a loss. It's not often. I'm not gonna say it's often, but it does happen, right? I took a loss with Lucid, and I was very transparent. And I said, "Hey guys, Lucid didn't pan out. Sometimes you gotta know when to pull the plug, right?" But guess what? I protected myself on the way down with covered calls, so my pain was not as much. And although I lost money, I used it as a tax loss harvesting, because basically I've made so much money this year, right? And then now I need to start thinking on making that number smaller by going into some stocks that are being lagging, and then I'll sell for a loss to make my profit even smaller, so I don't have to pay as much taxes. Because sometimes that's what you do. Totally okay. But yeah, no, you're fine, man. It's gonna take time, and it's all good. We're here. We're here to keep you honest and to keep you like with your 10 toes down and let you know how this market is moving. And you will feel free to ask questions at any point, Roaring Yitty, anytime, man. That's what we're here for you, dude. Jay is saying drop the 250K in a money market fund, spend $200 and then take class 1 with Uncle Bruce. If I see myself comfortable with his ideas and take class 2, it might drop. Some in VIG and BND. All right. Roy saying Savage is giving the Uncle Bruce methods. That's it. It's just, it's Uncle Bruce school of thought, man. I'm with it. I'm just an extension of him in a way. There's some things that I don't agree with him on, like 0 day till expiry, but overall, the man, it's one of my mentors for a reason, man. Kennedy saying I'm still growing my account, but it is growing. You have to have patience. Indeed, you do have to have patience. And that's the hardest thing to learn sometimes. Is sometimes you have to be okay just folding your arms, right? The Savage way. Do you see it? Sometimes you have to be okay folding your arms, man. And you have to say, there's not much I can do. Sometimes, not often, but sometimes I'll go 3, 4, 5 days, a week and a half without trading because there's just no entry. Like I've had, nothing is there. Like I see some companies go up a percentage or two, and some are down a percentage or two, and there's really not much to go into. I like to go in when a company has gone down 5, 10%. for cash secure puts, and I don't like selling covered calls on a company unless it's ran at least 5-10% or more. So like I'll just you know I'll just look at entry points and I don't find any, and I don't do anything. And those are boring days indeed. But sometimes you got to cross your arms. And then the 2 weeks from then is when my stocks or sorry, some cash secure puts and covered calls are about to die. And so then I see opportunity then, right? And I'm just like either let them die worthless or buy them back for like, a small percentage of what I sold, and then do another cash secure put or another covered call. It's it. It's not rocket science, my friends. It's just, you just got to get used to it. Susan saying, don't forget, SoFi was 24 before a few years ago and dropped to 488. Uncle Bruce was telling folks to keep buying the stock, right? And cash Bruce, all the while SoFi dropped and dropped. It can happen again. It cannot. I'm not saying that it's impossible, but it's this was way before the the bank charter. This was when SoFi was like a small mid cap, the tiny small cap, and there was so many things, in flux. It is just not. It's just I don't see it. There's in the realm of possibilities. It is, of course. Anything can happen, of course, but I just don't see them losing 80% of their value, 90% of their value, um, when there's a correction of 10-15% in the market, you know? And because I just don't see them getting smaller. If anything, SoFi is getting bigger. And that's the argument, right? That there's more products being available like every quarter. There's more users and members every quarter. And because interest rates were going to go lower, now that's going to be kind of like a green flag for people to take out loans. Especially um, with the real estate market heating up. The numbers just came out for last month. There was 800,000 new homes that were sold in the United States, and these numbers were like, what the fuck? Nobody was expecting that, but 800,000 new homes were sold last month. You know, I my argument is because people knew that there was a rate cut in the way, and now there's going to be more rate cuts in the way. So I think there's going to be more homes that are going to be sold. Those loans have to generate somewhere. Someone has to make those loans happen, and I think SoFi is going to be one of them. And SoFi mitigates risks by loaning, to people that have FICO scores of 750 or 760 and above. So they're not just loaning to like random people, like just anyone. They are loaning to people that have, a really good FICO score, because they're going to minimize the risk of that person going into default. So they're going to make more money when the rates are down, because now it's a bank. It's not just, a fintech, with the hopes of ever becoming a bank. They are now a legitimate bank. So they're doing what banks do, which is grow. And they don't have to worry about everything else I just talked about, like just brick and mortar places with like, people working in there, and insurance and medical and all that stuff. They don't have to worry about that, because there's a very small amount of people that, work in the hubs. Credit cards, they have credit cards. They have so many. This is a one-stop shop. They just keep increasing, what they can offer to the consumer, and they keep them within the ecosystem. That's brilliant. Susan saying, I just think I'd rather buy back than a stock split, though. Roaring really saying, I'd rather buy back than a stock split. I agree. Reverse split, I mean. Yeah, I get it. Jude K saying, not in it. Baby did the same thing. GME did warrants. Wheel strategy has been extremely PI profitable for me this past year, Joey saying. Roy saying, I'm not young, 45, and I can't work. Oh, still young. 45 is young. So just so you know. Um, but in a year, look, in a couple of years, your portfolio is going to get larger, no matter what. It's just it's going to take time, right? But whenever, like I said, whenever you have an extra 100, $200 to dump into the market, dump it. And if you can't find an entry somewhere, it's okay. Then dump another 100, 200 when you get a chance, and then when you have enough to go through a cash secure put somewhere at in a position of a stock that you've been eyeing. That's where you go. So just take your time, go at your own pace. Don't try to, don't look at me and the way that I trade. Don't look at someone else in the chat, right? Don't say I want to trade like that guy. That's the biggest mistake you can make. Um, because your situation is different than mine. But I started just like you. I started with a couple of stocks. I was, small portfolio. And eventually I started adding and adding and adding. And the first 100,000 are the hardest to make. The first $100,000 are the hardest to get to. I can guarantee you that. But once you get to that, it exponentially goes. I don't know why. I don't know if it's a psychological thing or just because that number is so key and like then just getting bigger. But the first 100,000 were the hardest. Once and you got to desensitize yourself from seeing your portfolio go up 10% in a day, down 5%, up. It just sometimes that happens. So I desensitized myself during 2022 when the stocks were just taking a shit, right? Like we were just talking about SoFi being $4. Yeah, I was buying SoFi at $4, $5, $6, and I kept adding, but I just had a vision. I just knew where it was going, and I just, you never know for 100%, you never know, but you do your due diligence, and you're like, I just believe, right? And it's not feelings here. Like there's a lot of metrics that I've taken into account. There's a lot of reading. There's a lot of quarterly earnings that can prove that this company it's on its way up. Just like GME. Now, that's not to say that you can't be careful. That's I'm a bear. You guys know that, right? I'm telling you, be careful with this market. Don't go in YOLO into shit. Don't go and say, I'm going to take a risk here in this company that's at a 52-week high and buy it there. And then I see some dumb people, and I don't mean to sound I don't mean to sound mean, but some dummies go in and buy stock at 52-week highs and do buy rights, which means you buy the stock at a 52-week high, and then you sell a covered call. Some idiot that I know bought Open Door at $12 or like $11, and I was like, dude, that's not. It's green. He's like, yeah, I'm gonna do a buy right? And then he sold some $13 covered calls, and yeah, he brought in like $1.50 in premium, right? But like the stock went to 8, 7 and change, and it's like you bought it at 11 something. And yeah, okay, you bought back your covered call at like 80% profit, but like if you would have just fucking done a cash secure put on a day when it went down to 8, you would have made more money and you would have bought the stock cheaper. So, you know, you got to look at entries, right? And I don't go into like 52-week highs and buy stock. Wait for it to like retract some and go in when it's red through a cash secure put because that's a better entry than going in at a 52-week high. Right. QSI did shelf offering on Friday, so it took a dump to 139. It's all good. I'm just adding. Hector, what is a symbol for Terra Wolf? WULF. WULF is wolf. Hello, everyone saying Moneymaker 1 is in a house. Susan says, Savage, do you share some amazing rights? You do share some amazing rights, and I'm learning from you how you stagger expirations. Always stagger. See, that's the thing. I always every month I have money coming in. That was the my frame of thought, right? That was the plan when I started getting bigger of a portfolio and like all my portfolios, right? And I was like, I need to have money coming in monthly. I need to. That's I told you guys. The way that I think of my portfolio is as a building. My portfolio is a building. I'm the manager of the building, and the portfolio, the shares, right? The stocks, they're the tenants, and they gotta pay a monthly fee. They have to pay a monthly fee to stay living there. So that's the way that I roll. That's the way that I write, and that's why every month something is expiring. Every month I'm selling something that expire. I'm 2 months down the road, but this month something's expiring, right? And then next month I'm going to sell 2 months down the road, but something will expiring, and then the next month. And so there's always something that's about to expire, and it's always something that I'm selling. And sometimes it's multiple positions. Sometimes it's like it's just always having like always generating income, right? That's the way that you want to work it, so that your portfolio is always having money coming in and expanding. Well, now whether the stock market is up or down, it doesn't matter. That's why I tell you guys, it shouldn't matter to us. If you're a new person watching my channel, it doesn't matter whether the stock market is red or green. You're gonna make money, but you have to have a good approach. You have to have a plan, and you got to look at where your entries are, right? And go in through a cash secure put. What is a cash secure put? You're basically buying a stock on a red day, and you're saying to the to your brokerage, I want to buy this stock, but I don't want to buy it where it's here today, although it's already on sale 15%. I want to buy it for an additional 10% off in a month, and I want to get paid for that. You see that? So then you're buying it for less than what it is in the future. Worst case scenario, they return you your premium, right? And you keep the profit. And then you could sell another cash you put later on, and so on and so forth. You know, and that's how we always have something moving. Always, we have money coming in, and growing our portfolio. Um, Roaring Yeti's telling you the wolf is Terror Wolf. SoFi spams me 3 times a day to apply to a personal loan. There it is. And some people say, hey, you know what? Today I'm going to take out a loan from SoFi. And although their interest rates are not as high as others, they're still interest rates, right? So as long as they keep making money, that's the way it's done. Susan saying credit, I can only see it as a black swan event happens in the stock market as a whole. All stocks can drop and drop hard. Think of 2008 and 2020. That's what I mean when I think of 80% drop. A lot of okay, I get it. But not the whole stock market dropped 80%, right? Some stocks dropped 80%. Some stocks dropped more, but it wasn't the whole market. Like, yeah, black swan events happen, but it wasn't the whole market. You had some stocks, like banking, right? In 2008, they went fucking down to like 80% discounts. But those have now they're making more money than they ever did. So like the stock market is a device that is designed to go up over time, no matter what. It's the one device that is designed to go up no matter what. So it's just volatile right now. I want you guys to do something for me. I want you to look at the last year, um, right, from 2024 till now, and look at the stock market and the volatility and how it goes up and down, up and down, up and down, right? It's crazy. But now, after you do that, I want you to go and say, give me the same graph for the stock market in the past 50 years. And you will see that it does go up and down, but it goes upwards, right? Like this. Because like when in doubt, zoom out and you'll see that no matter what, the stock markets just go up. And so that's why, even if your stocks were to, devalue or be undervalued for whatever reason, add more. And see, I was one of those people that I was like, I knew that Uncle Bruce had seen this before, right? We've been there before. So you know that when stock is cheap, you add. If I would have just never added to SoFi and taken the approach of like, oh, well, I'm not going to do anything because the Black Swan event's going to happen. And when we're at the Black Swan event, I'll be like, well, I don't know when we're going to recover. So I'm just going to wait until my average is again where it was. And I'm going to then buy more. Makes no sense. I really went in heavy at the $5 and $6 land. And I brought my averages way down. Otherwise, I would have kept 2,000 shares at like $16, $17, right? But I kept buying on the way down. And I even bought like 24. I bought at 20. I mean, that's what you do. And then I had 20,000 shares. And now that I see it go up and we hit 30, I'm like, holy shit, that's a lot of money. But imagine if I wouldn't have bought that much. I wouldn't have made that much money. So again, you have to know what you're holding. And you have to be okay averaging down. This is where the beauty of averaging down comes into play, right? And this is something that, if you're a new time investor, a newbie when it comes to investing, you don't know much about. But like if you buy a stock at $10 and it goes to 7, then you buy at 7. So if you bought 100 at $10, you spend $1,000, right? Well, now you buy 100 at 700. So your average now goes to 850. And if it goes down to 6, you buy 200 at 6 or 200 at 4. So that, or 5, so that your stock now is not 850, but it comes down even more to like $7. And if it goes to 3, then you buy 500 at 3. And then it comes down. So then it would recover and goes back to 10. Now, you're at like $5 on average instead of 10. And then you have, instead of 100 shares, you have 1,200 shares. And then you go up, right? In any dollar you go above $5, it's like $1,200 that you're gonna make because you average down. That's the beauty of averaging down. We command the same. I'm like 34 minutes behind, but I have savings account for my kids, 3 ETFs, MCSI, World, SPY, etc. In over a year, the return is about 4%. What the hell is this? Exactly. And that's what the market tells us to do, right? That's what everybody tells you to do. Nobody teaches this shit that we're doing in high school. You don't go to college. My wife got an MBA. She has an MBA, a Master in Business Administration. Not one time did they fucking talk about the stock market in a business administration fucking program. Paying thousands and thousands of dollars in fees and not one time did they tell her how to make money in the stock market. And here I am, a dumbass flunky, making money in the stock market without an MBA, outperforming a lot of motherfuckers from Wall Street that have MBAs. Why? Because, man, I put my money where my mouth is. And I was just like, you know what? This is it. This is how you make it. I lost the fear, and now I see opportunity, and I just grow my portfolio. And I found like-minded individuals in you guys, and that's why I have this platform, because I want to hear about you guys making money. I want to see you guys become millionaires. That's the goal, to create 100 millionaires with this channel, so that I want to read about like Roaring Yiddy telling me when she's like 50. Hey, dude, I'm in Thailand, and I just made $8,000 last month, and I'm financing this Thailand trip via cash secure puts and cover calls. Fuck yes. I want to hear that. I want to read that. I want to read a Wing Commander saying, dude, I'm in Vietnam, Japan, Hawaii, trading. Just made $6,000 trading. Crazy. That's how we do it, baby. That's what I want to read. Susan Shop saying that Wing Commander, a lot of parents are opening up Roth IRAs for their kids, looking to the versus a savings account for the little ones. See, that's exactly why my daughter sits down with me sometimes, and I tell her, look, I'm buying a cash secure put. Look, what am I doing? Oh, you're selling a call, Daddy. That's right. You're selling a call. And I'm getting her used to seeing graphs, and I'm getting her used to seeing the system in the operations of it, right? And I'm getting her used to seeing tickers. Like, she knows what DIS means, right? She knows what TSLA means, right? She knows what Goog means, right? She knows NVIDIA. She knows what that means, right? And next is going to be seeing the tickers on the TV. I'm going to tell her that's what it means. This same thing that you watch on Daddy's, watch list, except those are moving like this on MSNBC and Fox News. I'm going to teach her how to read that. So these are little things, right, that we take into we don't really think of them anymore because they're just like second nature to us, right? But these are things that little things that we can teach, our children, so that when they are old enough, we could be like, hey, you got to start a portfolio and start selling covered calls and cash secure puts, because this is generational wealth we're talking about here. Okay, these things we're talking about here, they're not just for me and my life. Like, I assure you, Win Commander's gonna teach his kids about fucking cover calls and cash secure puts. I can guarantee you, Susan Shops and everything. Kent's mom is teaching Kent this shit, so he can keep fucking playing golf until he's 80, financing it via cash secure puts and cover calls, right? Karen D saying, I need a personal loan a few years ago and got it with SoFi. That's how it's done, my friend. Put that money to work. That's how it's done. Susan Shops is saying something. A lot of parents are going to Roth IRAs. Oh, yeah. Yep. Hey, Savage, happy Sunday from Connecticut, is saying Tom Cough. Hey, Tom, what up, man? Connecticut? I love Connecticut, dude. I went to school in Northfield. I went to school in Northfield, Massachusetts, not too far from Connecticut. I actually I did a year at Wesleyan. So yeah, I know where you are, my friend. Roaring Yiddy saying, I'm recovering, rebuilding my account because AMC and day trading almost not quite blew up. My savings got cut up, Yeah, day trading sucks. Don't be a day trader. Trade daily. There's a fucking difference, okay? Don't think you're too smart. You think you're gonna outperform the fucking overall market. Never go against the Fed. All that shit. At the end of the day, the slow and steady wins the race. It's a marathon, not a sprint. It's boring, sometimes fucking ridiculously boring. But boring makes a lot of money. Okay? Do you think that the ultra rich like to have fucking? Do you think they're like thrills? Do you think they're like thrills when it comes to their money? No way. Yeah, they like to fucking do dumb shit that boosts their adrenaline. Like, yeah, I'm sure, but like when it comes to their money, they don't fuck with that. They put in the most boring ETFs. They put it into like they buy bonds, right? Because I mean, if you have $1 billion, why would you want to growth is not really that important to you that much. Like, you want to just keep that money. You want to preserve wealth. And even if it's $1 billion, right, and you get 4% of that through bonds and boring stocks and shit, like ETFs and such, right? Like, that's a ridiculous amount of money. That's a ridiculous amount of money. I don't think people know just how much money $1 billion is. Like, it's insane. Like, I think the equivalent that I know is a million seconds, right? A million seconds is like 11 days or something like that, right? Or something like that. Let's see. I think it is. I think it's like a million days. And like a billion seconds, it's like years. So that's the difference. And it's like a lot of years. And so that's the one metric that I know that's just, it's mind-blowing when you take into account how much a million is as opposed to a billion. And it's just like an insane amount. Like, I don't think billionaires should exist. Definitely not trillionaires. Let's see here. Rory saying, I'm recovering, rebuilding. Yes, I got you. Didn't know what I was doing when I got seduced into the market originally. Cash secure puts and cover calls has me almost back to beginning and teaching me to be less risky. This is honestly, cash secure puts and cover calls are like the most conservative way to like take an approach into the market, and you're gonna build wealth. You'll make a lot of money, but you have to keep. You got to stay disciplined, right? You got to keep doing it, and it's not something that is just gonna happen, right? You have to look at how the market's moving. You have to take a good approach and look at when stocks are running 12%, 15%, 20%, sell cover calls. Stocks went down 10, 15%, sell cash secure puts, That's kind of how you take it in. And then, I don't like doing weekly. Some people do. I like monthlies. I like selling a month or two in advance because I could bring in more money that way, right? I like to take big chunks. I like big chunks, and because that way it protects me from the downside in the long term, right? It's even a little more boring than weeklies, but there's a reason my graph, when I do the 1 year out, year to date, whatever, it's up like 55%. So like in a year, I've outperformed the market by 55%, 60%. You could do it too. It's just you got to stay disciplined and you got to keep on doing it. And sometimes the shit is boring, but you know what? Boring will not risk you your money. It's not a risky bet. Now there are risky stocks, but you're going to mitigate by expanding your portfolio, right? That's how we do it. All right, so Andres de la Torre is in the house saying, Savage, Beach Boy, you talking to me? Savage, man. Beach Boy's in the house. What's up, Beachy? Roaring Yiddy saying inflation also applies to the stock market when the dollar loses value, right? So the dollars, okay. A dollar now is not going to be, it's always going to be worth more than a dollar 100 years from now or 100 days from now. That's the way you got to look at it. That's the way inflation works, man. It's just, it's not something crazy. It's just like a dollar. This is why I love premiums today, right? This is why I like to put my money to work now. Whenever I sell something down the road, 2 or 3 months, I bring you the premium. I put it to work now. So I buy stock now, so like I use it to buy, stock at market price. If it's a devalued or undervalued stock, or it's even better, and because that, this money is obviously worth more now, because although the stock is gonna be worth more later on, the money, it's not. It's just inflation. So yes and no when it comes to your point, Roaring, because if you put your money to work now, it's obviously going to be more. It's going to be worth more later on, because you're buying stock that eventually is going to worth more over time, right? But the dollar itself, it's going to be worth less just because of inflation. Does that make sense? Andres de la Torre saying, S, you feel comfortable with SoFi, January 2026, $35 cash secure puts. Go to 2027, dude. Get more money. If you're gonna put $35 in a play, right, like that, go to 2027. Look, if you're gonna do $35 cash secure puts on SoFi, right? Bear with me here, okay? If you're gonna go to January and you're gonna do cash secure puts on SoFi, 35s will bring you 853 right now. I understand. I get it. I get the appeal. Okay. But if you go to January 2027, you're getting 1143. That's $5 more. Why wouldn't you take more money? Like, are you allergic to more money? I don't. That's my point. And this is the thing. And hear me out. Say for whatever reasons we do have a nice little pullback in the market. All right. And let's say contagion hits SoFi. Let's say that Susan Shops is right. Let's say she's right. And let's say that SoFi goes to 25 bucks. Let's just say it does. And it stays there for till 2027. Okay. Well, you mitigated risk because those 35s brought you in 1143. Right. And so you actually made money, and then you're gonna get put those shares, and you made like $1.50 per share by it staying, in the $25 area. Okay, that's the protection that you get by going out a little further as opposed to staying closer. And you bring in more money because let's say for whatever let's say you're selling $35 cash and puts because you're bullish on SoFi, as am I, right? Great. So let's say that SoFi in fact goes to 36, 37, $38 by January, right? Those 35s instead of 11.43 are going to be closer to $5, $5. So you're bringing in like $6 in premiums, 50%. That's $6. Okay, if you would go to January, you're bringing in 850. So it's so you make $8. So is $2 really like $2? Is that really worth your peace of mind? Is that like the stress level? Like the reason you're writing out farther out and bringing in more money is so that you can relax. That's the reason that I sell cash secure puts out a few, so that it gives me peace of mind and it gives the stock time to do whatever it's going to do, and it's got time to recover or whatnot, right? And it brings more money. It brings more money. And if you really, let's say for whatever reasons, in January, the stock is like a 38, 30, you could roll your 35s right out to 2028 and bring in even more cash. Or you could do 40s. You could go to 40s in 2028 and then bring in another $5. What? So like by going out a little further and taking in more money, you're not just securing yourself, a bit more and kind of mitigating risk a bit more, but you are also um, giving yourself the time uh, to see where the stock is going to be doing on that date. And then if you want to increase your position and take a more bullish approach by going out to 40 now instead of 35s, you would bring in more money even by going to 22.8, because then you know that the stock in fact is going to be that much more valuable, in which case you could be like, this stock is no way stock's going to be $40 in 2027. So you're like, here, $500 more per contract, you're going to bring in more premium, right? So it's a win-win. So like you're kind of buffering yourself on both ends. That's how I view that. So I would feel more comfortable going into 2027, my friend, just because of what I just explained. Mando saying hi. Oh, Mando number 5, Savage. That's the way to teach kids, says Jude K. Susan Shop saying, Savage, do you hold your cash secure puts to expiration, or do you buy back and close at 25, 30, or 50? It depends. So if I'm able to bring in my cash secure puts, okay, so let's say I wrote a cash secure put a week ago or 2 weeks ago, right? Out to 2026. And in 2 weeks, I brought in 40%. I'm going to close it because I already made 40% in 2 weeks. Now I don't have to hold it till expiration and wait another 4 months if in 2 weeks I brought in 40%. Same thing, like if let's say I wrote something for 2027 and in 3 months I brought in 50%, 45%, I'm not going to wait a year and change to bring in the other 50% because there's opportunity elsewhere. So I close in. I close at 50%, 40%. It's just like, and when you see, the way you trade and you see all this 50%, 40%, 30%, 50, 40%, 25%, 30, 50, like, how do you go wrong? How do you go wrong bringing in 50%, 30%, 20%? How do you go wrong by bringing in always, above 20%, 25%? How do you go wrong? And some stuff like those Tesla cash secure puts I was talking about earlier, those 190s. Yeah, I closed in like at 80 something percent, but it's still they don't expire until December 2026. It's just I already brought in 80%. They're 80%. Like, it makes no sense to hold till expiry because I have to wait a whole year now and change, right? So I seldomly hold till expiration. Not that I haven't, but I seldomly do because I just, if in a few weeks I could bring in 40% and I don't have to wait months, that's when I take my money. And it never hurts to take money off the table. Let's see. Roaring Yuri saying open January 2027, $10 cash you puts is 530 is 570. Is that too risky to go too far? Yes, it is. Don't do open anything out to 2027. I'm really thinking about that because I'm trying to premium grab for a surgery a few states away. If you're gonna do that, right? If you're gonna sell open, it's not something I see long term anything in. But if you're gonna do a cash grab, what is that bringing you in? Around 50% by going that far? Why don't you do BBAI, Big Bear AI? Why don't you do 2028 cash secure puts, which would probably bring you around that much, like 50%, or do 2027 cash secure puts, bring in like 45%. I think that would be probably a better move than an open. Less risky. The company's making money. Open is up in the air. See, like I like open. I was pounding the table when the shit was 60, 70 cents a share. I like open, but there's just too many variables and unknowns right now, right? So I would not take that gamble. I feel more comfortable going on, through BBAI or RXRX because RXRX actually has contracts that they've penned with Bayer and Genentech, and GlaxoSmithKline, I believe, and Merck. I mean, those pharmaceutical companies are heavy hitters. They have contracts with RXRX. They're going nowhere, nowhere. And RXRX is a heavily shorted stock. It's not going to go out of business, but it's heavily shorted. So the premiums are there, and the opportunity of it just skyrocketing is also there. So although where those cash secure puts could be like worth whatever they are worth right now, they could be worth nothing in like a year. It's just one thing to take into account. Um, that's one thing I struggle with is how to figure out expiration dates, because if I go far out, then I have to be more patient if it goes against me for a while. Well, that's the thing. So you could look at it like that, or you could look at it as, instead of you having, this is the way I look at my Leap cash secure puts. Uh, a, a savings account. Look at it like that. It's a savings account that you don't touch, right? It's like fucking like end of the world money type of shit, right? Like if something like shit hit the fan and you really needed the money, like that's when you go into that. If you're not gonna need it and it's just your savings account that you're gonna put your little, then that's when I go into like that Charles Schwab account and I do leaps, right? Like the BBAI $7 cash secure puts that brought me in like 375, 385 at a point. I did those then there, right? I did the 30 $30 cash secure puts SoFi ones that brought me in like 50%. That's where I did them. Um, you know, uh, I believe the 150 Nvidia cash secure puts are there as well. So this is like over 50% that I brought in, but it's compounding because I'll bring in 5% of that total. And next year I'm going to get 5% of whatever the total is this year, and so on and so forth. And so it's cash grab. So, that, look at it like that, Roaring. Um, Expiration dates should not mean anything except like it's just it's money in the bank. Say I this is money in the bank. I'm not touching it, and guess what? The money in the bank is generating your premium today. So if you put away $20,000 and you can bring in $10,000 in cash right now, but you have having a fucking savings account, that's the way you look at it. Like the bank is paying you 50% return on your investment by having your money sit there for 2 years. Why wouldn't you take that? And this is why you do it on stock that you believe you're bullish on, and that's very low risk, and the premiums are high. SoFi will not be here at $30 in 2028, 2027. It just won't be. Everything is telling you is not, right? BBAI, same thing. But it's all good. That's why you take what is how adverse to risk are you, right? What is your risk tolerance here, right? You got to take that into account too. Jockstrap Mishap saying, what are your thoughts on the Phil Eurozone price target? Phil Eurozone? Who's that, dude? Oh, for GME? Hold on. I think I know what you're talking about. Yeah, it's not. I don't know. I haven't. I haven't read on that. You gotta let me know. What is his price target? Premium of the option is here saying, "Yo, let's go." So put, sell, calls, and collect lots of premium. That's exactly it. It's dumb and it's dumb. It's ever so slow moving, but it is lucrative. You got to be okay with crossing your arms from time to time. That's the way it works, my friends. So, Jockstrap, you got to let me know more, man. I don't know if his price target is above $30 an hour or $30 a share. I like it. If it's not, then he's full of shit. That's the way I got to see it. That's the way I see it. This beauty right here, huh? Let's see here. I'll show you guys quick. You see that, guys? That's the way that we were looking on Friday. I expect us to see a lot of red there tomorrow. I expect us to see a lot of red there tomorrow because I think tomorrow we're going to start getting serious about what the October market's going to bring. So I think September is going to stay true to its name and stay true to what September brings usually in the market, which is a lot of red. And I think this week I'm expecting a lot of red so that people can start kind of taking profit, moving money around so that people can start buying to start moving up in October. That's my take on it. That's what I think will happen. Now, will that happen? We don't know. But what we know for a fact is that SoFi is $27.93 a share right now. AI is $17 a share. Unity is $42 a share. RXRX is $472 a share. Rivian is $15.60. SOXS is $529. Another thing I wanted to talk to you about is SOXS. Ticker is SOXS. It's basically a direction daily semiconductor leverage fund. It's bearish towards semiconductors and it's leveraged 3x, meaning that if semiconductors go down 1%, this will go down, this will go up 3%. It's inverted. Do not be afraid to start taking positions and buying some SOXS, guys. It's at 52-week lows almost. And same thing with SQQQ, almost 52-week lows. Do not be afraid to start buying those because what you're doing is you're mitigating risk. You're basically telling the overall market, I do know where you're at, and I'm okay with that. However, if you were to go down, I am protected. It's basically a little insurance. TZA is another one. This is the daily cap bear ETF fund, right? So let's say the small caps take a hit. This actually goes up. It's 827 right now a share. The uh, the 52-week low is 768. So it's close to the 52-week low. This is kind of when I start taking a position on small cap bear ETFs and semiconductor bear ETFs and obviously the QQQs. I start getting a lot more bearish on them because when they do go down, they go down fast, which means these the SQQQ, the SOXS, and the TZA go up fast, right? Um, and you're also protecting yourself in case the stocks that you're holding go down, those go up. You're always ahead of the market, right? You're not trying to time anything. You're just taking a little position so that if it does happen, you're protected, right? Instead of your portfolio being down 20%, it'll be down 10%, but guess what? These will be down like 60%, 70%, and then you can sell and take profit then. So you can use that profit, right, from the SQQQs, the TZAs, and the SOXLs or SOXSs. You could use that money and then you can buy low because that's what the market is. You're taking what the market is giving you. Anyhow, my fellow simpletons and degenerates, it is time for me to start taking my leave, my friends. I will be on tomorrow at 8:30 a.m. Thank you so much for watching. I appreciate you guys taking time out of your awesome day to watch me and to talk shop. And I appreciate your comments, your thoughts, and you guys being here, watching me today on a beautiful Sunday, pretty nice and smooth, calm Sunday. Tomorrow, again, we're expecting the market to be red, but if it's not, great. We're going to go and buy SQQQs if possible, right? TZAs if possible, and SOXS if possible. And start taking a little position, because we make money when the market goes down. We make money when the market goes up. That's how we roll. And if the market is red tomorrow and some stocks are down 10, 15%, guess what? We're going to sell some cash secure puts and bring in premium. And if the stock market tomorrow is red and stocks are up 10, 15, 20%, guess what we're going to do? We're going to sell covered calls and bring in that premium because we're not at the mercy of the market. We're a whole different beast. We are the one percenters, my friend, and that's what we're trying to be. We're trying to stay there. We're trying to make $1 million for everyone that's watching, right? So then in a couple of years, we will laugh our asses off and say, hey, you guys remember when the Savage used to have like 25 people watching, 50 people watching, and then I'll have like 100. But it'll be people that are always watching, man. And that's exactly what I want. I want people that are always watching, that, it's a few of us, but it's just we're making bread. And sadly, that's the way it is. People don't think ahead. People don't think about investing and, taking control over their livelihoods and seeing this like as a way out of the hamster wheel, right? But it's all good. You guys are here. That's exactly what matters. And you guys are paying attention and we're making money. That's exactly what we're making money. Everyone else is losing money in the stock market right now. 90% of the people investing right now are losing money. Everyone here is making money. That's all you need to look at. Tom Kaufman saying, see you tomorrow. Good night. Oh, Jared saying, replace squad. Beach Boy saying, started SOXS, small position last week. Might look into SQQQ and or TZX. And you could look at both. They're cheap enough. Cindy B's in the house saying, hi, Savage. Cindy B, how are you? I hope you're doing well. You came in towards the end of the show, but you know what? You could always watch on the rerun. We actually had a pretty good show today. We talked about a lot of things. and everyone learned some stuff. It's all good. Um, Thank you for watching, my fellow simpletons. I will see you guys tomorrow, 8:30 a.m. California time. Until then, be well and prosper. If you know, you know. I'll see you guys tomorrow. Take care, you knuckleheads. Peace.